Hey there, friends. It's Dan, your Chief Financial Ninja here at Black Belt Ledgers. And this week's video, I want you to take control of your cash flow, right? So, my accounting firm specializes in helping contractors, folks like plumbers, electricians, HVAC techs, roofers, construction companies, landscapers, grow their revenue, increase their profits, and maximize cash flow. And so, what I wanted to do today is talk about that last piece that's so important, and it's taking control of your cash flow. And so, when we talk about cash flow, the main thing that I want to clarify here is that my cash flow is not the same thing as my profits. So let's first dive into these with what we're talking about, right? So when I talk about profits here, profits are my revenue, and then from that I take away any deductible expenses in my business, and this is then my profit, right? So this says how much money I make minus how much money are deductible expenses. And you can kind of think about profit, as what's left over. But cash flow has a little bit more to do with the amount of money that's actually changing hands. And so I'm going to give you an example here of what this big difference is. And I'm going to do that with a very simple example. So, in our example, we're going to take a look at Sarah. And Sarah's a plumber. Sarah gets called out to a client to a job, and she gives them the price, talks about the estimate, client agrees to the work. And so what happens is Sarah will generate a bill that she's going to hand to the client. Sarah does the work, leaves the bill behind. And then 30 days later, when she sees that she has her net 30 billing, is when the client pays. And of course, when Sarah does the work, and leaves the bill with the client, right? There's a few things that have to happen here. So in terms of kind of just looking at the pure profit part of this, when Sarah generated the bill, her accountant said that this is when she earned the money. When Sarah did the work, bought the materials, did the labor, the transport, the install, the disposal of anything left over, this is when her accountant says Sarah spent money. And so, based on the fact that she generated the bill at the time of work and spent the money, let's say it was a $750 job, Sarah spent $250. This means she's left over with $500. And this is what her profit is. But let's talk about what happened with the actual cash flow part of this. You remember how I said Sarah generated her bill when she did the work and then left the bill with the client? But they didn't pay until 30 days later. What actually happened inside of Sarah's bank account is that first, she spent $250 on all of her materials and expenses. And then 30 days later is when she got paid the $750 because that's when she's told the client it would be due. So according to her profit and loss statement or the reports that her accountant generates, Sarah made $500 one month, but 30 days later is when she actually saw that money come up. And this is the difference between profits and cash flow. Profits are what happens based on your reports, and those are usually generated when the work is done and when the expenses are billed to you, the contractor. The cash flow is when we actually see things hit the bank account and when that money has to be paid. And this can sometimes put us in a little bit of a bind. And so what I want to do is show us a couple easy things that we can do to change how we take control of our cash flow. So how to take control of it. And these are some really easy things you can do. You can change your terms. So you remember in that earlier example how Sarah gave the client 30 days? Well, what if she changed that to 15 days? Or even better, what if she took payment at the time service was due? She took payment when it was due. Or in this case, she took payment when the work happened. All she needs to do is put a little app on her cell phone and make it so she can take payments through like PayPal or Square or anything along those lines. And now what happens is that her cash flow is a lot closer to what her profits are. And that can be super important because this is one job, right? What happens to this effect then if you do hundreds of jobs? Let's look at an example of this. So if you continue at 30 days terms and not get paid up front, let's take a look at what happens. So we're going to look at 1 week. And in 1 week, Sarah was really busy because she ended up with 6 jobs. And we'll keep our math easy, where each job was just like the one that happened earlier, right? She billed $750. She did the work and incurred $250 of expenses for each job. And so she ended up on each job with a nice $500 profit. If I multiply all of these out by 6, that comes out to be $4,500 here. This comes out to $1,500 in expenses, and this can lead to $3,000 in profit. And that's great. But let's say we did this still in our 30-day terms, right? This $250 expense has now turned into a $1,500 expense. So what this means when it comes to my cash flow is that, let's say we keep this really easy on the first of the month, say maybe October 1, just to keep things simple. Sarah billed $4,500, but saw $0 hit her bank account. By the time she got all of her bills and invoices paid, by the 7th of the month, in this case October 7, Sarah had to pay $1,500 for her materials. And then on the next month is when she got paid that $4,500. Yeah? So that means between October 7 and November 1, she ended up $1,500 under until people decided to get around to paying her. So let's take a look at what that would look like if Sarah took payment at time of service. Right? So if she took payment at the time of service, it's that same situation. It's October 1. And she billed $4,500. Also on October 1, she also got paid that $4,500. Now, when Sarah had to go in and pay her $1,500 in expenses, she still had that nice $3,000 in her bank account right now. And that meant when she had to go do more jobs next week, she had a little bit of money on the front end, so she was able to show up to a job prepared with the materials. When she shows up to a job with the right materials in hand, that means she spends less time at each job because she doesn't have to run to Lowe's or Home Depot or Lock Supply or anything along those lines in between each job as it comes up. This also means when she shows up with the right materials and she's prepared for each job, since she's spending less time at each job, she can do more jobs in a week. She can add 2 more jobs. And remember, each job was $750. So in this example, she could earn an extra $1,500. And since she's taking payment at time of service, she's able to put that extra $1,500 right into her bank account. And so this is one very simple trick that you can use to help increase and manage your cash flow. In this case, the amount of money in your bank account. Because if you take payment at time of service, or you cut your payment terms down to 15 days instead of 30 days, right? This means you get money sooner. And a lot of your cash flow problems can be fixed with one simple change. I hope there was a lot of value here. Again, my name's Dan at Black Belt Ledgers. I help plumbers, electricians, HVAC techs, roofers, landscapers, any kind of contractor grow their revenue, increase their profit, and maximize their cash flow. Be sure to leave us a question in the comments if you have any, or subscribe to our page. We're here almost every week.